Welcome to the BVR Business Valuation Resources DealStats Database Demonstration. My name is Kent Lance Schmidt, and I'm the President of National Business Appraisers, Inc. I'm also a Certified Valuation Analyst, or CVA, with NACVA, the National Association of Certified Valuators and Analysts. I'm a CBI, Certified Business Intermediary, with the International Business Brokers Association, the IBBA. I'm also a former CPA, and I work with the California Association of Business Brokers. I'm also a member of the California Association of Business Brokers, and I was their treasurer and on their board from 2015 to 2016. And I serve on the Education Committee along with two other members, including the chair. And we have recently redeveloped their software for valuing businesses. So I look forward here to giving this demonstration. Hope it will be helpful to anybody in CAB or any other organization that may find it useful. DealStats, formerly known as PratStats, is actually the third transactional database of small businesses that was created. And it was developed by a man named Shannon Pratt back in 1996. Shannon Pratt is arguably the godfather of valuation. He's an incredible man. I had the opportunity to meet him, but he has done a lot for this industry, including the development of this database. Shannon started to collect data for M&A transactions at the request of M&A Source, and then it became the official IBBA database. Initially, the database contained 50 fields of data per transaction, as it was intended and still is intended primarily for larger transactions. It was in a hardback copy back then. More recently, they have added smaller transactions, and it is now available online, both as a single source as well as to buy the entire database, or you can contribute to get it for free. But it is still the premier M&A database of comparable sold businesses. To summarize, DealStats was started by Shannon Pratt in 1996 at the request of M&A Source and became IBBA's official database with 50 fields of data at its inception, and is intended primarily for M&A transactions. It was originally printed only, and then small businesses have been added later on. The DealStats data is extremely well vetted by BVR. BVR stands for Business Valuation Resources, and BVR now maintains the database as Shannon Pratt retired. It was reformatted and redesigned in 2018 and is now known as DealStats, and it's a very high-functioning, very sophisticated database, again, especially designed for M&A type transactions. DealStats offers many statistical tools and data. They offer many graphs and bar charts. It's available for download both in Excel and PDF format. There's a lot of training videos available for learning how to use the database. Again, it is very sophisticated and there's a lot of moving parts. It is the premier database for M&A transactions. It's really the only database for M&A transactions. But it's also a good second source for Main Street businesses, and that's what we're going to demonstrate today. Today we're going to demonstrate its functionality for Main Street businesses. We're not going to get into the M&A aspects of it, as that could take days. There's just a lot of data there. In addition to the SDE multiples and revenue multiples that you find with BizComps, DealStats also has gross profit multiples, or GP multiples, multiples for EBIT, or earnings before interest and taxes, and EBITDA multiples, earnings before interest, taxes, depreciation, and amortization. Again, these are thresholds used for larger M&A type transactions. The database has now over 199 data fields with over 40,000 companies in its database. The median selling price is $500,000. The average selling price is $218,000. And again, it can be purchased by subscription on a single search or for the whole database. However, business brokers or those who sell businesses can contribute a deal and get a single use for 90 days for each deal you contribute. What is actually sold? Well, that's important to know for any database that you use of sold business comparables. DealStats includes inventory in their multiple as well as other noted assets. Additionally, DealStats includes both stock sales and asset sales in their database. Since these databases include stock sales, then an analyst or broker must be careful and must see what's included in each sale, especially in the stock sales, and then must make adjustments so that those comparables reflect the business being valued, and possibly eliminate stock sale from the sample when you're valuing the smaller businesses. Current assets and current liabilities must also be considered. It's important to understand that you have to be careful not to convolute an asset sale with a stock sale. BizComps has only asset sales, so DealStats can be utilized, but you need to be careful that you don't include asset or stock sales that could change the multiple if it's not appropriate for the smaller businesses. So you have to be very careful in how you utilize this data. DealStats contains both asset and stock sale transactions, as we mentioned. So the user has to know which they're using in their database and which is appropriate for the sample for inclusion. So we need to take into account the size of the business and its nature to note what is included. You can, however, take stock sales, remove some data, change the multiple, and add it by utilizing Excel spreadsheet download and change those multiples. So even stock sales can be utilized, but it gets very tricky, so you have to be very careful if you're going to do that. Asset sales include inventory, furniture, fixtures, equipments, goodwill, intangible assets, and possibly license and contracts too. Stock sales include all assets and all liabilities. However, some stock sales may have some of those excluded depending on the transaction, so even then you must be careful in what you're looking at. Continuing on, we have to note that there is a big difference between an asset sale value and a stock sale value, as I mentioned earlier. The stock sale value may actually be very close to enterprise or equity value. In stock sales, generally speaking, all the liabilities transfer along with all the assets. Quite often cash maybe not transfer, but maybe some cash does, or maybe no cash at all, but most of the other liabilities and assets transfer in a stock sale. Nevertheless, some learning and attention by the asset broker is necessary in order to use the data properly and achieve excellent results and not mix the metaphors, so to speak. In analyzing the transactions, DealStats has plenty of data and plenty of data fields by which you can compare the various transactions within the database in the sample that you draw, as well as comparing any of those particular comparable sold transactions to your subject company. There are numerous fields by which you can compare transactions. Additionally, you can click on the page icon and a data screen will pop up so that you can get a detailed report of any specific transaction in the sample that you choose. While DealStats has numerous thresholds of earning multiples or earning profit levels, we're going to focus on seller's discretionary earnings for our use here, because seller's discretionary earnings is the profit level used by most small micro business, what we call Main Street or mom and pop type businesses. Seller's discretionary earnings is basically EBITDA, which is the earnings before interest, taxes, depreciation, and amortization, plus the salary to one working owner, plus their perks and one-time expenses. Additionally, as I've mentioned, DealStats does offer other multiples or other profit levels from which you can determine a company and determine a multiple to apply to that given profit level, such as gross profits, EBIT, earning before interest and taxes, EBITDA, as well as still having the use of revenue multiples or SDE multiples. For our example here, we're going to use a sample business that has the following criteria. We're going to use the description of a business that is a sign manufacturer with the amount of revenue of $500,000, profitability of $90,000, and an SIC code of 3993 and an NAICS code of 339950, and it's a non-franchise. A full demonstration of this same sample business can be found on the BVR website, and I narrated that as well. They asked me to do that because I have both credentials as a certified valuation analyst and as well as a business broker and business intermediary. So it has a lot more, it'll talk a lot more about the functionality of the website on that demonstration. So the demonstration will follow, but if you have questions or want more information or help, you can go to BVR resources at the website here, or the link listed here. They're very great at helping you. They're very willing to help you in anything that you have. Great people there. Or you can email me, Lance at nationalbusinessappraisers.com, or call me. My cell phone number is 949-533-6965. I'm a self-admitted geek and I love doing this. So I love helping people. So let me know if I can help you. The next screen you're going to see is going to be the BVR DealStats database interface. Once you've logged on to the BVR DealStats database, this is the screen that you'll see. Most of the time I use the quick search, which is what we're going to use today, which is all that's necessary for a smaller business, for Main Street type search. But there's a more advanced search. There's some display options, some sort options. The download we definitely use. We're going to use, you can download both in PDF as well as an Excel spreadsheet format. The user reference has a lot of data in there. There's a lot of things you can find, videos and training that will help you learn how to use this database. Again, it's a very sophisticated database, primarily intended for M&A transactions. So that's the kind of thing that you want to look if you're going to go farther into this from our demonstration today and look at both and look to do larger M&A transactions. You're going to want to learn how to use this database more completely. But for our purposes today, we're going to keep it simple, and we're going to look for only company, as we've mentioned, in the small size that we're talking about with $500,000 revenues. So, all right, so we'll begin our search. The first thing I do when I search the database is I like to type in a keyword of the type of company that I'm looking for. So sign manufacturer, I would type in sign here. And you'll notice, let's see here, let me reverse this. Go in here and show you something. If you look down here, you see that there's 40,171 transactions or sample companies in this database initially. That's the total size of the database to begin with. Once we start manipulating the data, this number is going to shrink significantly. So when we go up and put our word sign in here, we're going to see how far it drops from that 40,000 level down to the only companies that have the word sign in their data stream. We could put sign manufacturer, but maybe restrict it too far. So let's see what happens here. We typed in sign, and as you saw the thing scrolling across, it automatically reduced it. It dropped it down to 1,757 transactions. That's still pretty hefty, and there are probably a lot of things in there that aren't relevant to our search. So we're going to go ahead and add the word manufacturer here. We can just put manufacturer and stop there and see that that gives us down to 101. Let me see if I finish typing it. Let's see what that does. That's 60. Just go back to manufacturer and 101. So we'll start with that level of transactions, 101 transactions. And the next thing I want to do, actually, what I want to do from this is find just the companies that are manufacturing. So I want to eliminate anything else. So if I scroll down here, we can see our two SIC and NAICS codes. The code that we already know is 3993 for SIC and 339950 for NAICS. So one of the reasons I do this search primarily is to find those codes. So now that we know that the code we're looking for, we've confirmed that we want to use these codes here. We have the SIC and the NAICS code. I'm going to utilize just the NAICS code 339950. So go up here to our search criteria, and over here is to the right is how we do that. We're going to click on NAICS first. We're going to go to manufacturing, click on the plus sign, and it has a drop down menu. 3399, so we're going to go to miscellaneous manufacturing. 99 other miscellaneous manufacturing, so there's 3399. If we look down here, we find sign manufacturers. Okay, sign manufacturing, and there it is, 339950. Now this is a great way to use this database because now you have the drop down menu and you just click on that box and you see it's going to enable all of the sign manufacturing companies. Now if we scroll down here, we'll see that it shows 99 companies. However, because we have sign manufacturing up here, if that's not in the data string of the description of the business, it could exclude some of those companies. So you always want to eliminate that from the data string, and let's see what happens here. Now we're back up to 236. That means there was 137 companies that weren't shown in that sample because we had the word sign manufacturing in there still. So that's why it's important to go up and eliminate that from this category. Okay. Now, 200 companies is quite a lot of companies. I feel that I would want to, the next thing I would do, regardless anyway, is to go to the sales and reduce our sales size. You can see that there's companies with $100 million in revenue, or billion, those are billions. So we definitely not going to be something that we want to look at for a small company. So let's put in a reference range, and let's go 200,000 above and below our $500,000 revenue value. So let's start with a floor of 300,000 and go to 700,000 and see what happens now. So now we're 200,000 above and below that 500 threshold, and now we're down to 80 comps. That's reasonable. That's a good starting place. So the next thing I do is I want to see where my statistics are and to see how close the sample, how tightly knit it is. So I'm going to click on the Statistics tab. And as I scroll down here, we'll see what we have. Here's our multiple. MVIC stands for market value of invested capital to SDE. So sales price is interpreted, market value of invested capital is interpreted as sales price. Again, this database is intended for M&A use. So that is the threshold of the way that it is categorized in that arena. MVIC is equal to sales, so, or sell price. So if we go over here, we see, if we look at the range here, the range, we have a range for each of the things, for sales price, revenues, EBITDA, etc. If we look at our multiple of SDE, it goes from a low of 0.3 to 78.8, which would be ludicrous for a small company. So if we look farther over here, we go over far all the way to the right-hand column, and what we have here is the coefficient of variation. This is a statistical term, and it determines or helps to denote the closeness of the sample. So this is 2.4. We want 0.3, 0.3, 0.4. So we're off by quite a bit. We're going to have to trim this sample quite a bit more. So, but I like to start with this first initial look to see just where I stand here. So what I'll do is I'll go back up here. I'll go from the Statistics tab back to the Data tab. And the next thing I'm going to do is I'm going to put an SDE reference range. So when I click on SDE, you see what happens here? We've got some companies that we have, well, negative SDE. So that number one should be eliminated. And our SDE size is still too large. So we're going to put a range in here of 60,000, which is 30,000 below our 90,000 level, to 120,000. So let's start there. That's what I would normally do, something like that. So let's put in 60,000, tab, 120,000. There we go. And you see we dropped our quantity down to 21. So now I think we're going to have some pretty good data here with a smaller sample size. We've now eliminated companies with negative SDE and with extremely high SDE, along with narrowing our revenue range. So let's take a look at our statistics and see where we stand now, see how much closer we are. Okay, we're getting very close here. We still have a range of 0.3 to 5.9, which is probably too high. In my experience, this type of company would have a range, given its size of revenue and profitability, of approximately 1 to a 4 multiple. So 5.9 in my opinion is too high. If we scroll across, we see that our coefficient of variation is 0.5. So that's still too high. And if you look at the other markers here, we can look at the median, harmonic mean, the weighted harmonic mean, and the mean. So we can see what the mean here is 2.6, weighted harmonic mean 2.5, the harmonic mean is 1.7, and the median is 2.2. So let's go in and eliminate now some of these higher companies that have higher SDE multiples than would normally be experienced for a company of this size. So we're going to scroll up here, we're going to toggle back to our data. And the way we can do this, the easiest way, is to go over here to the multiple of discretionary earnings, the MVIC or sales price to multiple of discretionary earnings. and we can sort. We're going to sort by ascending order. Okay, so we click here. If you just click the bottom arrow, it automatically will sort by ascending order. And here's some of our multiples. We see a very small one, 0.3. I would consider that too small. So we can go over to the left here and we click on this box and it gets rid of the check mark. It's now deselected that multiple. Okay. So 1.1, anything above 1 is probably reasonable for this size business in my opinion. Again, you have to use your own instincts and your own knowledge of companies that sell in this arena and have some kind of reference. You can always get that from other associates, but I just know 1 to 4 is probably normal. Maybe you have something in the 5 range, but I'm going to keep it from about 1 to 4 in this range here. So if we scroll down, we can see that the top one here goes to 22 or 2.2. However, you notice that we're only viewing 10 at a time. I want to view more companies at a time than just 10 per page. So the way you do that is you click on this view, and since we've only got 21, we'll just go to 30. Now we can look at all 30 transactions at one time and scroll all the way down to find, again, the multiple discretionary earnings that are higher. We deselected the first one that's too low. Let's go down and deselect those at the higher end of this range here. So there's our 5.9. Again, in my opinion, that's too high. I would get rid of that one. I would deselect the 4.7 and the 4.2. And now, let's see what happens we've reduced the sample size by 4. Let's see what happens when we go back to look at our statistics. Okay. If we go back to our statistics, if we go down, well, there we are. Voila, 0.30. That is statistically relevant. In my opinion, that's what most analysts would acknowledge. We have a total of 17 comparable companies. Usually you want at least 6 or more, so 17 is great. The range for multiples for SDE or for price to SDE is 1.1 to 3.7. That to me is reasonable. And then now let's look at our different metrics. So the median right here is 2.2. That's the middle piece of data. If you go over here, the harmonic versus the mean here and the weighted harmonic mean are next. So we have the mean here at 2.3, which is very close to the median of 2.2. The I believe that's the harmonic mean over here is 2.1, and the weighted harmonic mean is 2.3. So in this case, the weighted harmonic mean and the mean are identical. But you can see they're only a point off from the median. Most analysts that I know, for many years, people have used the median. However, the weighted harmonic mean helps mitigate the aspect of some outliers. So that is what I use. I would use the weighted harmonic mean of 2.3 in this example. So to summarize, we started with our transaction with a quick search. We typed in our keyword. We determined our NAICS code, entered the NAICS code. We reduced the sample size by the size of revenue to a revenue range of 300 to 700,000 and an SDE range of 60,000 to 120,000, and then we removed a couple outliers. So this is then what we see here is our statistical data, and it has it's a great presentation for a buyer or seller or anyone that you're going to give this to. So the next thing we do, what I do is I go up and I'm not going to in this case, but I would save the data right here and give it a specific name. But for our purposes here, the next thing I'm going to do is use the download tab and show you how you can download. Now when you click on your tab, you have two choices, from an Excel spreadsheet and the DealStats PDF. I use both. But for this demonstration, I'm only going to pull up the DealStats PDF report. Now once I click on that, if you look in the bottom corner, bottom left-hand corner, you see the PDF report. If I click on this, it'll now open that report up for me. As you can see, it'll give you the date I performed the download, the number of transactions in the sample, the NAICS code, the revenue range, and the SDE range. So This is great, a great summary of data. As you scroll down too, in addition to the things that we already discussed here with showing the coefficient of variation, the various metrics. Again, also you can look at, you can have the 10th percentile, 20th percentile, the median, the 75th and 90th. If you want to use percentiles, you can use that. Maybe you feel your company is in a higher percentile than that and you want to use those percentiles. Same here. You can also adjust the data when you're doing the sort. But it also shows you the individual transactions, which I love. So here are the individual transactions that make up our 17 companies. So it lists those here, and this report is what I will send to a client. Additionally, I will send them possibly some individual reports of some of these individual companies. So I'll show you that next. So if we go back to this screen, if you go back and click on data, you'll see there's an icon to select a report. So you can actually pull up a report for any of those companies that you selected. So if you go down here, here's one we deselected, but here's the next one up. You could click on this page here and it'll pull up a transaction report. Same with any of these here. I'm going to go down to one that's, see if we get one that's close to our size. Here's one with $500,000 and revenues. So let's click on this one and click this report and use it as our example. Now, when you pull up this report, there's some important things to look at. First thing I look at is right here off to the right. What is the transaction type? This tells me it's an asset sale. So for Main Street business, that's perfect. That's what I want. I would probably eliminate stock sales if there are any stock sales in the transaction. And if I have more time, I'll click on all 17 and make sure I don't have any stock sales. Or I would modify a stock sale data to make sure it doesn't skew the results. So this shows it's an asset sale, shows how many days it took it to sell, the sale, the date the sale initiated, the price, and then down here it shows what their net sales are, or cost of goods, some of these other information, your rent, owner's compensation. Again, these are good metrics to look to compare to your subject company so you can find one. You may want to send one or two of these reports to your client if it's really close to their company, if it shows a better, shows the company is closer to what they have than the overall population. Next, you see the balance sheet data here and purchase price allocation. There isn't any balance sheet data here. Quite often you don't find that with the smaller transactions, but we do have a price allocation. So it shows that there's $4,000 of inventory that transferred, the assets, fixed assets worth $60,000, and the intangible assets worth $161,000, totaling $225,000. So I would save a couple of these reports and I would send them to my client as well. Next and lastly, I'm going to show you some of the other functionality you can use. I don't use a lot of this functionality for smaller businesses, but there's a couple things I do. So if we go back to this page with the quick search and you scroll down, you'll see here's your data and statistics tab that we've been using. But I like to go over to the Insights tab and it'll generate some things for us. You have interquartile, scatter plot, stack, distribution. So if you want to look at the distribution curves, that's the bell curves. You can pull up the bell curves based on price to sales, price to gross profits, etc. But the one I like and the only one I usually send to my clients is the scatter plot. So here's your scatter plot showing your regression line and showing the data points on price to net sales, price to gross profits, price to EBITDA, price to EBIT, and the one I use here, of course, MVIC, or market value invested capital, or price to SDE. Here's our regression line. You can see the data points are relatively close to it. There's a couple that you possibly could remove, but I like the number of data we have here. And this is very, very useful to your client. They can see this. They can see where their company is, if their company's here or here or here along the line. You know, this one was 90,000, so our company might be at the lower end of the range. But anyway, this helps show the company on a graphic format the way where the data points lie on this for this sample of data. So for more training, if you want, you can go to the user reference section here. You can pull up their reference guide, all kinds of tools, all kinds of training videos, all kinds of information. You can also email the people at BVR. They're great and we're very helpful in this. You can look at the other categories here, and if you decide to get into M&A type transactions, you can learn how to use this other functionality as well. Again, if you have more questions, you can email the people at BVR at bvrresource.com products/deal stats, or you can email me, Lance at National Business Appraisers, or call me on my cell at 949-533-6965. I hope this demonstration has been helpful, especially for Main Street smaller businesses. Again, this database is actually devised and invented and created for M&A type transactions, and it has a lot of useful information there, but it can be used as a good second source for small transactions if you use it properly. You have to be careful not to mix your metaphors with stock sales and asset sales. So any questions, go here or call me, and I hope this has been beneficial. Have a great day, and we'll see you on the next one.